Hello, Mr. Brown. Thank you again for meeting with us today. We appreciate the opportunity to present to you. Let's begin. When you first came to see us, you indicated that you'd like us to take a look at your current portfolio and perhaps make a proposal on some of the things that can be done different. So, this is where your portfolio stands today. As you can see, it's mostly weighted in money market and Canadian equities with very little invested outside of Canada. Basically, you have over 10% invested outside of Canada. And the rest, about 80%, you have invested in Canadian equities and money market. Before going over our recommended changes, let's first take a look at how you responded to our profile questionnaire.
So in your investor profile questionnaire, we asked you the following questions. I just want to go over why we asked you these questions and what is the purpose of it. First question we asked you was, what is the primary purpose of your portfolio? Understanding the purpose of your portfolio helps me determine the appropriate investment strategy. Second question I asked you was, what type of portfolio would you like to own? This question helps me gauge your risk tolerance and investment preferences. As some clients prefer a conservative approach with lower volatility, while others are comfortable with high risk for potential higher returns. Next question we asked you was, how long would you be willing to wait for your investments to regain any lost value? And this third question assesses your investment horizon and risk tolerance for short-term fluctuations in the market. The next question we asked you was, how long will you continue to remain invested before you begin withdrawing your portion from portfolio? This helps us gauge your withdrawal plans and timeline, and it is crucial for crafting a suitable investment strategy. And it also allows us to consider factors such as liquidity needs, income requirement, and the potential impact on your portfolio's growth over time. Based on the questions, the answer we received, your investor profile is aggressive growth. So we need to rebalance your current portfolio according to this new asset mix, which is cash will be 0%, fixed income will be 10%, Canadian equity 30, US 30, and foreign developed equities 20%, and foreign emerging markets at 10%.
Okay, so because we have our own approach to asset management and investment research that we spend years developing, we're going to recommend that you sell your current portfolio in its entirety. Your new strategy will be allocated as follows. In the fixed income category, we recommend buying $20,754.90 of BMO Bond Fund. For Canadian equity, we're going to recommend purchasing Scotia Canadian Growth Fund. And in the US, we recommend purchasing the Sun Life MFS US Growth Fund, both for $62,264.69 each. And finally, internationally, we recommend buying Canada Life International Concentrated Equity Fund and the Canada Life Emerging Market Large Cap Equity Fund. Now, we're going to show you your new portfolio, what it looks like. Yeah. Now you'll notice that we recommend a cash holding, should you need it. That's the 9-point high interest saving series. You don't need cash right now at the moment. However, you did mention that David has the learning disability and Joshua pays child support for his daughter from his previous marriage. It's possible that you may need to set aside some cash in the future. If you think you're going to need to access money from your RRSP, although it's not ideal, we're happy to talk about that further, but we would recommend that you utilize a high interest savings fund such as this one.
Your portfolio leans heavily towards cyclicals such as financials at 30.61% and sensitives such as energy at 17.79%, industrials 11.51%, and technology at 11.39%. In your current portfolio, as we've previously discussed, you have high exposure to the Canadian market where financials, energy, and mining are dominant. One of our goals in the new portfolio was to increase your defensive position, which we have accomplished from 6.62% to 15.64%. In terms of our global allocation, another goal was to diversify outside of Canada. This we have accomplished by reducing Canada from 75.79% of equity portfolio to 17.61%. We've also significantly increased our exposure to the world's largest economy, the United States, by increasing that weighting from 16.25% to 50.43%. In addition, we've significantly increased our exposure to Europe and Asia. Overall, this is a more diversified portfolio, giving you a stronger exposure to all sectors of the economy. One area we will have our eye on going forward is energy. The new portfolio is somewhat light on energy, and as a result, this is an area that we may look to add to in the future. Next, we'll discuss your performance. As we know, the current portfolio has really lagged the benchmark portfolio by a considerable amount for the last 3 years, performing at 4.07%, while the benchmark portfolio with similar asset allocation delivered 14.51%. Our new portfolio has had fairly strong performance over the last 5 years, delivering a 12.35% rate of return over the benchmark return of 10.82%. And last year it delivered 28.46% over the benchmark of 19.18%. This year so far, it's been outperforming the benchmark by 4.21%. There's been some years, 2019, 2020, and 2023 to be specific, where the portfolio outperformed its respective benchmark. The key to your long-term success is to own high-quality securities, which you will be owning, across multiple industries, across multiple countries. This will ensure that as GDP grows around the world, you'll be taking part. Sure, there will be occasional bear markets that will bring the portfolio down a little. However, we see these moments as buying opportunities or opportunities to rebalance your portfolio.
Hello, Mr. Brown. So I just like to take a few minutes of your time to talk about the bear market. So there's always going to be a bear and bull market in the industry. We always had from how COVID affected us with the market to the 2008 crisis to the 87 stock crash, going back to the depression. What's important in these moments is that you have diversification, as that is your best tool to beat the bear market. And you do with the current proposed portfolio that we've implemented. You have more exposure to Europe and Asia, though still most of it is in the US and Canada, the largest economy. Of course, let's talk about some of the negatives quickly. Loss of liquidity and loss of capital. If you choose to liquidate your portfolio, of course, since you have your son with the learning disability, you might need to do that. In this case, when you liquidate some of your portfolio, some of the good news I could tell you is, if you choose to sell it, the losses will be carried over to the next period to cover the capital gains, if you have any in that next year or the years over. So it'll always carry through. So again, I would also like you to consider to advise you to purchase some of the same type of securities at a lower price, since they're basically, as I could say simply, on sale. And this is the best time when markets are down to, if you have any extra available assets, to purchase them at a lower price. So now I just want to quickly talk to you about the fees and how we are paid. So for financial advisors, the asset under management, or AUM, for financial advisors managing your portfolio is usually 1.02% for anything under $1 million. We also have commission fee for every transaction made with stock, or 3 cents a share for US and Canadian equity. As for commission for our mutual funds and our money markets, being $40 plus $1.50 per each $1,000. So yeah, those are our current fees.
Thank you, Mr. Brown, for meeting with us today to go over our recommended portfolio. Do you have any questions?